The surprising truth about getting rich. Here's the most unglamorous truth about getting rich, something I repeated so many times that people eventually stopped hearing it. Wealth is built through boredom, not brilliance. Not drama, not excitement, not some magical turning point. Just consistency, patience, and the discipline to avoid stupidity for an embarrassingly long time. People think financial freedom is some mystical prize awarded only to the gifted. But if you study any of my documentary or dive deep into my interviews, lectures, you'll notice one recurring message. The easiest way to get rich is to avoid being stupid. That's it. Not sexy. Not cinematic. Not the stuff that goes viral on social media. But it is the truth. And if you're looking for investment for beginners or trying to develop the millionaire mindset Charlie Munger lived by, this is the first lesson. Wealth is a slow game for rational people, not a fast game for emotional ones. People don't fail because they're dumb, they fail because they're impatient. I've watched highly educated people, doctors, engineers, bankers, destroy their long-term wealth because they couldn't tolerate boredom. They had the intelligence. They had the income. They had more than enough opportunities. But they did not have patience. Charlie Munger used to joke that if you want to understand the stock market for beginners, you only need one lesson. The big money is not in the buying or selling, but in the waiting. But humans hate waiting. It's the psychological disease that ruins more fortunes than bad luck ever did. That's why Charlie Munger, Invest in Psychology, is so brutally honest. Always said humans sabotage themselves long before the market does anything to them. People want excitement. They want to feel clever. They want to feel like they figured out the market. So they jump from stock to stock, strategy to strategy, influencer to influencer. And then they wonder why their wealth never compounds. Wealth grows quietly, losses happen loudly. Compounding is a silent force. You don't see it happening. You don't feel it happening. You can brag about it at parties. Nobody wants to say, I just sat on my investments for years while nothing dramatic happened. That doesn't get likes. That doesn't get applause. That's what real wealth creation looks like. Why saving and investing was not a flashy process. Look at any breakdown of my portfolio over the decades, you'll find long periods where nothing changed. No big announcements. No sudden trades. No emotional reactions. Just quiet, boring, steady compounding. Meanwhile, the people chasing excitement drown in volatility, stress, and disappointment. The difference. One group owns assets. The other group owns emotions. The psychology of doing something. Your brain hates inactivity. It hates uncertainty. It hates watching markets move without your involvement. That's why the average person feels a powerful urge to do something: buy, sell, tweak, switch, optimize, react. But this urge is poison. How to pick stocks. I explained it 100 times. The best way to pick stocks is to pick a few great ones and then sit on your ass. That's it. This is the opposite of what the modern world teaches. Everyone wants hustle culture, speed, dopamine, constant engagement. But the market does reward engagement. It rewards endurance. Why boredom is a superpower in wealth building. If you study my stock market strategies, you'll notice they all share the same DNA. Simplicity, rationality, long-term thinking, emotional neutrality, low activity, high patience. All of these traits are fundamentally boring. But here's the twist. The more boring your financial life is, the more exciting your actual life becomes. The calm investor who buys simple assets, avoids hype, holds long-term is freedom, peace, and options. The hyperactive investor, always searching for the next big thing, lives in anxiety, regret, fear, and confusion. Charlie finance tips are hard because they require emotional maturity, not intelligence. You have to resist FOMO. You have to ignore headlines. You have to be okay with slow progress. You have to endure years of feeling like nothing is happening. But something is happening. Your money is silently building the foundation of your future. Simplicity beats genius every time. Let me tell you a secret that frustrates a lot of smart people. A simple index fund strategy held for decades will beat of active traders. Because genius is fragile. Emotion is fragile. Complex strategies require complex discipline. Simplicity is bulletproof. This is why Charlie value investor philosophy is so deeply rooted in avoiding complexity. I didn't admire flashy strategies. I admire durable strategies. A brilliant trader can lose everything in a week. A boring investor can quietly become a millionaire while living a normal life. That's the magic of simplicity. The hidden enemy, the desire for excitement. Humans crave stimulation. They want quick results. They want dopamine, not discipline. This craving is deadly when applied to money. They jump into crypto bubbles. They gamble on lottery stocks. They buy because a YouTuber said so. They sell because a headline scared them. They blow up portfolios chasing hype. And then they wonder why people like Charlie ended up achieving long-term wealth with strategies that look painfully boring on the surface. Here's the truth. Every time you look for excitement in the markets, you're trading long-term wealth for short-term stimulation. And that's one of the most expensive trades a human can make. Calm minds make rich people. A calm mind is an unfair advantage. A calm mind doesn't chase shiny objects. A calm mind doesn't panic during crashes. A calm mind doesn't fall for scams. A calm mind doesn't treat the stock market like a casino. Charlie Munger investing psychology is built around one core idea. The first rule is to keep your emotions under control. If you master this one rule, you automatically outperform millions of people who can sit still. This is why investment for beginners should start with psychology, not technical analysis. You can chase excitement or wealth, not both. You must pick one. Do you want excitement? Or do you want wealth? You can't have both. People don't realize this. They think they can trade aggressively and retire peacefully. They think they can gamble and compound. They think they can follow hype and avoid losses. Reality does work that way. The people who end up wealthy are the ones who stayed quiet, stayed patient, stayed rational, stayed invested, stayed emotional, stayed in the game. This is the core of stock market motivation. It's not about hype. It's about endurance. Endurance beats intelligence. You don't need superior intellect. You don't need perfect timing. You don't need to be born rich. You don't need a fancy education. You don't need insider connections. You just need endurance. Why stock market strategies are boring but brutally effective because they rely on something the average person can't handle. Long periods of doing nothing. Most people destroy themselves long before the market has a chance to help them. The real reason the average investor fails is not lack of knowledge, bad timing, low income, or education. No. They fail because they are emotionally fragile. They don't understand that the strongest force in finance is not skill. It's time. And time only works for you if you stop interrupting it. A boring path to wealth. Let's break down the real process. Save more than you spend. Invest in simple, durable assets. Avoid debt, leverage, and hype. Hold for absurdly long periods. Do not panic during downturns. Do not brag during booms. Repeat for decades. That's it. This formula created millionaires, millionaires, multi-generational wealth, the entire Warren Buffett and Charlie Munger empire. And yet, most people simply won't do it because it's boring, and boredom is unbearable for the modern mind. The final psychological test. Wealth is not a test of intelligence. It is a test of maturity. Can you stick to a plan? Can you resist emotional decisions? Can you ignore social pressure? Can you avoid stupidity for a long time? Can you let compounding work silently? This is why Charlie Munger long-term wealth did not come from short-term brilliance, it came from decades of rational behavior. Everyone wants the rewards. Nobody wants the process. The world wants excitement. The world wants shortcuts. The world wants dopamine dressed as opportunity. But the market does reward adrenaline. It rewards discipline. It rewards owners, not gamblers. It rewards patience, not speed. It rewards boredom tolerance, not excitement seeking. If you can learn to be boring with your money, your future will be anything but boring. Wealth does require genius. It requires endurance. And endurance, my friend, is the rarest form of brilliance there is.